We're live.
Welcome to Stock Unlock Live, episode number 51. You might recognize Daniel from his very well-known YouTube channel covering many stocks in Canada and the US. We're going to be talking about the stock market. There is no shortage of excitement there. There's bubbles, there's AI, there's earning reports. I don't know where to start, Daniel. You tell me.
Well, we can start off by talking about SMCI, super microcomputer, but I think we can talk about that when some more people join the stream. So right away, if anyone has any questions they would like to ask us, feel free to ask us some questions right now as we wait for people to join the stream. And as you guys are typing in your questions, I will share my screen and show you all something really cool that we just released today, I believe. Right, Jake?
We did, as we are expanding the team as well. So behind the scenes, there is a new engineer on the team who worked on this. And one quick plug, if you're listening to the recording, this is a live show. Feel free to join us on YouTube sometimes, and you can interact with all of us live. Back to you, Daniel.
All right. So, well, we sound like a news station. So
I do. You sound great.
this is in the freeform tool. So if you've been using our freeform tool, you've probably noticed that it's only been lines forever. Well, now you can click this button, and if you want to view the data in a bar format, you can now do that. So we have added in bar charts to the freeform tool, which is pretty cool. If we want to do, let's do TD Bank versus Royal Bank of Canada and see what this looks like. And that's not right. Sorry, everyone. RY.
Oh, I thought you were saying something about like a bug, and I was just like, oh no.
No bug. But yeah, now we're taking a look at TD's revenue in green and Royal Bank of Canada's revenue in blue. You can clearly see them growing over time in bar chart format now. So that's kind of cool. People were asking for this, and we did it. So yeah, just this one toggle right here to view how you're changing, or to swap how you're viewing the data. All right. Now, let's get back into some questions here. Kevin says, I can hear you. Beautiful. Love it. Patrick says, hey guys, stock report. So Jake, I've been making YouTube videos. You know that I've been making YouTube videos. And people have seen on my channel that we have a new button that says generate stock report in beta. I'll show everyone exactly what I'm talking about right here. Do you want to talk about that at all, Jake? Should we talk about this?
I don't have much to say. I think we're still kind of building in secret here.
You have to go to, let's try Alibaba. There we go.
Yeah, because I think that's a bank stock, right?
Yeah.
Yeah. So you cannot see this button yet, but AI stock reports are coming. They are hot. We actually are going to start beta testing this. So I do see a couple people in the chat who are part of a beta testing crew. So if you are a Stock Unlock subscriber and want to give feedback on the first beta release of this, we would love for you to join us. Just shoot us an email, support@stockunlock.com, or hop in the Discord. And yeah, these are going to generate beautiful stock reports on a single button click. We believe the best way to utilize AI is to do the hard lifting on the behalf of the customer. We are not going to ask you to be prompting the AI or understand the inputs and outputs that are associated with getting a good response. We went through all of that development, and Daniel and another engineer on the team did a lot of the hard work there. So this is going to give you a PDF download. It's an extremely, extremely powerful feature. And in our humble opinion, having looked at tons of other stock reports from other sites, I don't think any other sites are going to be able to compete with this. Obviously, I have a slanted opinion here, but they're amazing. I mean, I don't want to make fun of people that don't have it, but like I have a leg up on stocks now that you guys don't, because I have insights on this feature all for myself right now with Daniel. But we are very happy to be releasing that likely within the next couple of months. That's really all I got. It's been an engineering masterpiece, and we are just so excited to drop that value for everyone.
Yeah, I'm excited for it. One click stock analysis is going to be cool. Okay, Jake, should we jump into SMCI, which is the hot stock everyone's talking about right now?
Oh yeah, it went over $1,000 after hours last night. Twitter/X is going bonkers on this stock. And if you are in the live chat while we're talking about this, drop your suggestions for other stocks to talk about. Today on the docket, we have SMCI, we have Airbnb, a little bit of Chewy going on here. And if you're following Daniel, of course, you're aware of all the stocks he talks about on his channel. And we love interacting with you all in the chat. So definitely let us know where you'd like us to take this live stream. But yeah, kick us off here. What are you seeing with this? Is this a bubble? Is the hype justified? Who do we believe?
I mean, this looks like a bubble to me, man. This is crazy. This is absolutely nuts. Like, man, this stock was $193 less than a year ago, and it hit $1,000 a share. So it's 10x in less than a year. That is crazy. That is crazy. It's a $56 billion company today. Yeah, I mean, I took a quick look at this company's financials. Their revenue on the most recent quarter grew a lot. They did $3.6 billion in revenue, which was, I believe it was more than a double year over year.
It was a 72% growth quarter over quarter, which we could actually see with the percent change toggle now as well, because we do have the latest financials.
Yeah. Okay. Trailing 12 months net income. So you can see the net income is growing. So I imagine that this is why people are so optimistic on the stock, because net income grew 7x since 2021, now to $732 million. The most recent quarter net income was also at an all-time high of $300 million. So if it can continue doing this, then that's $1.2 billion of net income per year, which on the market cap today is like 50 times earnings. I don't know. I don't know enough about these stocks to know if this is sustainable or not. Like, is it going to be able to continue growing its revenue at 70% quarter over quarter? Probably not. But
So
what do you think?
Let's keep ourselves honest here a bit. And I can actually talk a little bit more about this business. It's very technical. I did take time to study it a bit before the stream. To keep Daniel and I honest here, when NVIDIA popped up and went over $1 trillion market cap, Daniel and I both said on the stream, you can go back and see it, we're like, this is crazy. We don't think the stock growth is going to be sustained. And the stock has went up another 50%. So Brian McCormick, I really appreciate that comment. Daniel and I don't have a crystal ball, and the market can stay irrational longer than investors can stay solvent, or we're just really missing what's going on here. But the stock has already fallen from the peak. We also had a comment from True here that it's shorts covering. So potentially there's a squeeze going on here. I personally don't know about that one, but yeah, I think it's worth talking a little bit about what this business does. And then I have some screenshots from their earnings where it's a two-faced situation for me. I do think that there is incredible financials growth happening here. I do think that their business model is like actually pretty cool. So what SMCI does is they are kind of like an IT infrastructure contracting company. So traditionally other businesses, typically tech companies like the California area, would partner with SMCI, and they roll out a lot of custom IT solutions for giving you server farms, your own like private compute, and they are responsible for installing all that on premise, updating it, giving all the service around the basically like a private compute structure. They claim it can actually be cheaper than the cloud. And they're also riding a lot of there's a couple things going on here. They're riding some of the hype of the AI stuff because now everyone wants to start training their own models and stuff. They're going to this company to create their own server farms. They also are now starting to see an expansion of their customers in terms of the type of businesses who are buying their products. So typically, and this is from what the CEO said on the video I watched on their investor relations page, as I said before, typically tech companies, but now they're starting to get finance companies and other types of businesses that are starting to contract with them. And we can't deny, Daniel, that 72% revenue growth quarter over quarter is insane. I think that a lot of this stock rise in value is justified. And then, of course, the harder question to answer is, well, how much rise in value? Because there is a limit. I'm going to actually share my screen just to go through a few screenshots. One thing I noticed, Daniel, is they smashed their own guidance, which is always a little interesting to me. When a company sets their own guidance and then smashes through it, they have negative operating cash flow from an insane jump in inventories. So in my opinion, the winner here is probably NVIDIA, who's getting a ton of money from this company to buy their GPUs. And then this company is selling the service to like install that on-prem.
Yeah. Okay.
So I'll bring up a couple interesting things I saw here. One thing I wanted to call out for people, if you are interested in investing in this company, this is not advice, come to your own conclusions. I recommend watching this video. We're not going to play it here, but this is about a 4-minute video with the CEO. He's pretty charismatic. I don't know if I trust the guy, but he seems very smart. I thought that video was pretty great. And then, of course, there's the earnings presentation that we can look at here. So I'm not going to be scrolling through this live on the stream. I'm going to go through a few screenshots take me maybe about another minute. Just full disclosure here, I have not studied this business enough to understand it fully. It's a very complicated business. So this is just meant to start a conversation about the financials of the company. So over doubling the revenue year over year, 73% growth, absolutely insane. If you look at their highlights, though, their gross margin is pretty small, and they're not really generating a ton of profit off of this growth. So that was a slight concern for me. Also, here's what I say about the guidance. Guide to 2.7 to 2.9 billion. They got 3.6. So, I mean, there's a few ways to view that. You can say, wow, it's great they smashed their guidance. Or you can say, why did they guide so low? Was this really a surprise? Are they not able to predict their revenue? If you look back in time at their revenue trends, it's actually pretty choppy. So it's unclear if this growth is going to continue into the future. And yeah, those were just a few things that I wanted to call out. Highly encourage investors to go to their page, check out all the materials. And even as a technology person myself, Daniel, it was pretty hard to fully understand what this company does. I think you'd have to see who are their competitors, what kind of margins can they create if they're the ones buying the GPUs and hardware from other companies. So in my humble opinion, while it seems like a great business and they're growing a lot, the stock prices ran way too much for me to feel comfortable with personally. And I would honestly bet on the underlying players here that are actually creating the hardware, like the NVIDIAs of the world. Not talking about their stock valuation, but that's the feeling I got from taking a quick look at this one before.
Yeah, the one thing that you pointed out there that I also saw was just their margins are really not that high. Like if you take a look at their revenue chart here versus their expenses. So the revenue is green, expenses are the other colored bars. They don't really have a lot of profit margin. So as their revenue grows, it looks like looks like they have to spend a lot more money. However, you can see that their gross profits have started exploding. So that's nice to see. Let's take a look at that.
I'll check out that margin, though, because it's growing in line with revenue.
Yeah, exactly.
Yeah.
Yep. Yeah, exactly.
So I'd want to see this company's margins improve and see them show that they can continue this growth. Like, cool, you killed your guidance. Like, do it again.
Yeah, we'll see. I just have no idea if this is all sustainable. That's my thing.
Yeah.
I just don't know if in like 5 years, is this growth going to be continuing? Is it going to come down? I have no idea.
Daniel, you want to kick us off for Airbnb here? For anyone who's new to the stream, I was screaming about Airbnb from the rooftops at the end of 2022. This is a slight humble brag because I got a lot of crap given to me on this channel for talking so highly about Airbnb and me personally starting a pretty large position in it when it was around $90 a share. So far, that's worked out pretty well, and they did just release earnings. It seems like, Daniel, you actually are spending time looking at this stock now too, which is very exciting for me. And we actually have a repeat viewer in the chat, Ragnar Stonk, in here. Love that name. Jake, you were right about Airbnb, but Airbnb is like Apple for you. Do you want to kick us off here, Daniel? If not, I can keep motor mouthing about Airbnb because I can talk about it for hours. But I feel like I need to zip it and let a new person talk about Airbnb because it's just so enchanting to have more people come into the Airbnb ecosystem. What do you think about the stock price value today, the financials?
Yeah. Okay. So I took a look at Airbnb. I plan on doing a full video here on my channel, not on the Stock Unlock channel. Overall, looks like the business is continuing to grow. Their margins are ridiculous. I believe the free cash flow margin in 2023 was 39%, almost 40%, which is very high. Their revenue is still growing. I believe it was plus 14%. I actually have some screenshots here that I might be able to share.
I've got some too. It depends if you include FX or not. I think it was 17% and 14%, excluding FX headwinds.
Yeah, here. So I'll just share my screen here so that I'm not going off the top of my head. Okay. Here we go. All right. Yeah. So revenue for the fourth quarter was 2.2 billion, up 17%.
We can't see it.
What?
I also have this up if you want me to share it.
No, it's fine. Just let me do it.
Gotcha. We're doing it live, folks.
There we go. Now can you see?
Yep.
Okay. Yeah. So revenue up 17% year over year. Free cash flow. I did notice that in the fourth quarter, they had lower free cash flow by quite a bit. but it looks like that was a tax expense. But for the full year, it was 3.8 billion, which I believe was up like 12 to 15% year over year. Gross bookings up 15%. Nights and experience booked up 12%. So this one screenshot here is what I wanted to ask you about, Jake. So Airbnb says they are now looking to expand beyond their core. Airbnb is at an inflection point. We spent the last 3 years perfecting our core, and now we're ready to embark on our next chapter. We're investing in underpenetrated international markets, which we've already seen them do, but they also believe it is now time for them to expand beyond the core business and reinvent Airbnb. This will be gradual. It will be a multi-year journey, but they're excited about it. So what do you think Airbnb could be potentially expanding into? Because it looks like they're trying to actually diversify the business now.
You're poking the bear with this question. So I'll try to keep a lid on it. The context to give my answer here a little bit more meaning is one of the reasons why I love Airbnb so much is it is a founder-led business. Brian, who is the CEO, is a very, very methodical thinker. And if you listen to their earnings calls, which I listen to every one, he really answers all these questions that you're bringing up, Daniel, in great detail, as well as really great detail to these same questions that analysts were bringing up when they were on the call. So one thing that Brian says, which I love, is we need permission from our customers to expand, which he words as perfecting the core. So as many people were chiming about online, people got really pissed off that when you checked out, the price was a lot higher. There were issues with, when you have 99 million nights booked, there are going to be issues, okay? There's issues with hotels. Like, I'm so tired of hearing it. Like, it will never stop. There will always be bad experiences that happen on Airbnb because math is going to math on us. When you do 99 million nights booked, they're not all going to be perfect. So they have been adding a lot of features into their app, which I think are driving network effects in their own buyer-seller community for the housing exchange. To have more price transparency, have better insurance there, better support around all those common issues that can come up. In terms now to directly answer your question, Daniel, as to how are they going to expand, they are first and foremost a travel company. So where they're looking to expand is they actually made an acquisition from the founder of Siri. I'm forgetting the name of the company, who is creating an AI consumer product, and they were pretty tight-lipped about it. But the way that Brian describes it on the call is when you look at the world of AI, there's two players. He likes to use the analogy of a city with cars driving on it. There's people who build the infrastructure of the city. That's Google, Microsoft, debatably NVIDIA, right? People supplying the models. You can even throw Meta in there. And then there's the cars who build on top of that. He made it very clear that they're a car. They're not going to build an LLM model. They're not going to actually build the underlying infrastructure or the compute layer. They're going to build cars that are driving on that road. So he was pretty tight-lipped about it, but what he said is he thinks that the experience of AI right now is antiquated. He feels that the world is still a Web 2.0 world in terms of having chat interfaces and clicking buttons, and the way that we're interacting with AI, he still thinks is nowhere where it's going to be in a couple of years. So they're going to start shipping, and I need to be abstract here because they just didn't say exactly what it was. A lot of consumer AI features and consumer assistant features first built around their traveling, and then they actually hinted at expanding out. And what I'll end with saying, and I'm really largely quoting the earnings call here, is if you look at the huge tech giants like Google, Microsoft, Amazon, they all have verticalized revenue of several different sources. Amazon, they got marketplace, they got advertising, they got the cloud. I'm not going to run through all the tech companies, but they all have their own verticals. Airbnb right now has one vertical. Let me step back. Where they are going with all of this AI stuff is he's saying that they're going to be creating new revenue verticals where they are going to be the consumer travel brand and then extend out into more generalized personal AI-driven assistance. I really have a lot of faith in this company. I know some of the people that work there. I see who they're hiring. They're retaining top tech talent. At the end of the day, companies are just humans running around doing things, right? You have to have them feel valued. You have to have a great company, a great leader. And when I look at different founders to make bets on for the next 5 or 10 years, who I think can really capitalize and capture a lot of the new market value that's going to be created here, Brian instills me with a lot of confidence. So speculation, sure. But that is a big generalization of what was shared on the earnings call. And feel free to pick that apart because, yes, we don't actually know what it is. I get it.
Yeah, I don't know what it is. I'm happy to see they're expanding though. I'm bullish on them. I think they're going to. I agree with you. I think the founders are great. They're YC founders. YC loves them. They're probably some of the best founders YC has ever had. And yeah, no, I agree. I think it'll be exciting. I just have no idea what it looks like.
Yeah. One question that I wish was asked, so I'll ask it to myself. It's like, well, Jake, if you don't know what they're building, like, why are you investing in speculation? I just want to be really clear about what I like about this company. Their core business is fantastic. There's a lot of future international expansion opportunities. If you go reading through their report, you'll see all the unpenetrated markets, especially in Latin America, Asia, that they're just starting to enter in.
And China.
A few really fun stats about Airbnb. From the words of the CEO's mouth, their biggest competitor is hotels. It's not Booking.com. It's not Expedia. They don't have the product velocity. They're wrapping other services. They don't have the network effects. So in my opinion, when people say, oh, I'll just go book on Vrbo or like Booking.com instead, I think that's the same argument as saying when Trump dropped Truth Social, I'm going to go short Facebook because I can just post on Truth Social instead. That's just not how networks work. So please leave that at the door. I don't have any time for that. Honestly, I lost my train of thought a little bit there, getting caught in the emotions. But yeah, what was I saying before that?
I actually don't know.
I slept for like 4.5 hours last night, so I need a little bit of a slack there. But just like investing in their current growth business. I remembered. So for every 9 nights people stay at hotels, there's 1 night stay on Airbnb. If you look at the age demographic of people who are staying in Airbnbs, they generally tend younger. So I don't want to sound morbid, but as time goes on, people age, they die, other people come up, they graduate from high school, college. Airbnb is capturing those people right now in their network by offering single room stays, really like college level friendly experiences. And they're really getting them in as loyal customers. They saw the biggest growth ever in first time bookers. I don't remember the number this year for people who are coming onto the network. There's so much room and opportunity for growth here. The last stat I'll share, which I love, is they are really focused on having an affordable, trustworthy product. One reason why people go to hotels is because in general, it's a more structured experience. There's less things that could go wrong. That's just hard to argue with, right? And they're working really hard to solve that problem with Airbnb approved, basically like special labeled Airbnbs where they've done so well for so long and the hosts are so well liked. You could really get even better than a hotel level experience and trust by going with those options. And the last stat is the price of hotels, I think, increased 7%. It might have been 17. I'm forgetting the number, but the price of a hotel stay has went up over the last year. The price of the Airbnb stays has stayed generally flat. So if you just look at the numbers like that and you look at the market share opportunity for them, the change of demographic, where they're expanding into, I'm going to make a bold claim here. I believe that Airbnb can be $1 trillion business in the 2030s. I said it. You can quote me, you can make fun of me, but that is like firmly what I believe. Talking about the stock value today, Daniel, we talked about this before. Is it a good value right now to buy today? I haven't been buying recently. I think it's at fair value. I think the market has kind of caught up with it. You saw it dip on earnings and then it jumped straight back up. The last share I bought, I think, was at about 120. So I'm being patient on this one. It's actually already around 6% of my portfolio. I would happily let it grow to be like over 50% of my portfolio straight up. But I'm not going to be buying it when I think it's priced like this. And the market's been very frothy. It's now in the S&P. So it will start to move a little bit more with market sentiment as big money kind of shifts around. So again, I'm in no rush. This is not financial advice. Make your own decisions, but I am a hold now. But for long term, extremely bullish on the business. I'm just a very patient investor, and I try to find juicy opportunities, cigar butts per se, as some might say.
Yeah, I think Airbnb is probably around fair value now too. I didn't understand the reaction after earnings. Personally, I thought the earnings were actually pretty good. So the market, I don't know. I didn't understand that, but then it seems like now the market's happy with it again. It's back up. So that's cool. But yeah, it's I think it's like 25 times cash flow now. And they're projecting, I think it was like 14% growth next year, 24 times cash flow. So yeah, like the way I try to look at businesses, well, obviously I look at a lot of things, but let's say I believe in the future growth of the business over the long term. I believe it has a moat. Everything, all the boxes are checked, right? Then it comes down to what is the multiple it's trading for and what growth is it expecting? And when I'm looking at stocks today, Airbnb falls into this category now. It's over a $100 billion business. So what I've noticed is the larger cap stocks around 100 billion plus, they trade for multiples around 25 or higher, and they're projecting about 10 to 15% growth. Google falls in that category. I believe Microsoft falls in that category. So I don't know. I think that I don't think Microsoft is fair value. I think Microsoft specifically is overvalued. But when we're talking about Google and Airbnb, I think that they're priced okay. I don't think they're cheap. So yeah, that's kind of my opinion. I do think that there is still value in other stocks. Like I have stocks in my portfolio, for example, that are trading for about 12 times, 13 times earnings and projecting 20% growth. I like those a lot more right now. So for me, I agree with you. I think Airbnb is a great business. I think it's going to be larger in the future, but it's not like one I'm wanting to buy heavily right now.
Well, I'm happy that you've seen the light, because we don't have quotes from the show, but the sentiment was different last year. Rightfully so. They haven't proved it yet, but yeah, man, it's a great business.
No, they did prove it. You actually glossed over this, which is interesting. But in their report, they discussed the regulations that are going on in New York and everything. And what they said, which I never thought about, but what they said is now that Airbnb is gone in New York, hotel prices have increased, and the cost of traveling to New York has actually increased, not decreased. So the argument against Airbnb was that they were driving up the housing market and that they were actually causing hotels and everything to be more expensive. But now I believe that that argument is potentially being proven false, because housing prices and hotel prices are continuing to go up, even though probably because there's less supply. So I don't know.
It's
If that
funny
continues,
because they saw the areas outside of the cities grow because people still used Airbnb. They literally just went out of the city. And not to make it political, man, but the reason why that happened is because all the lobbyists for all the hotels were paying the politicians in New York City to draft those laws. And there was so much proof on the table that that wasn't what was happening. But yeah, I took notes on this too. They're working with local governments. They've actually given back, I think, about 10 billion in partnerships with local municipalities and things like that. So I'm just not concerned. I agree. I think that they really did a great job on that one too.
Yeah. And when I went to New York to visit you, there was no Airbnbs anymore that I could stay at. I had to stay at a hotel, and it was freaking expensive, man. It was so much more expensive. So yeah, I mean, I'm happy to admit when things change. I think that is changing, and we'll see.
What a great note to end on. I think that we got a few comments in the chat here. Daniel, feel free to take us to our next pasture, either comments in the chat, or I know that you also had a couple stocks. The only one I got left on my docket is very quick Chewy Talk, which is another one that we've discussed previously on the channel.
I've actually been getting a lot of questions about HDB. I will discuss this on my personal channel very soon. But yeah, I don't know why. Like recently on my channel, I've just been seeing a lot of questions about what's going on with HDB. So I will talk about that. Brian says 500 billion is pretty reasonable by the end of the decade for Airbnb. We'll see. I think they got to go quite a bit to justify that. GCT, please share as much as you can. This is from Dave Lund. So Dave, we actually did a full newsletter on GCT that will be much better than anything I can say in this right now.
Is that out? Because I can drop the link.
Yeah, it's out. So yeah, if you're interested in GCT, I would just go read our newsletter on Stock Unlock. It's free. Everyone can go read it, even if you're a subscriber or not. Seems cool. All right, Stock Unlock. How do you get the cash runway? Does it change month to month? No, it changes based on the quarterly results every quarter. And it's calculated by taking, if a business is unprofitable and losing money, then we take the existing cash position divided by the amount of money they're losing, and then tell you how much cash they have left at their current burn rate. So that's how we calculate that metric. It's updated every 3 months. Thoughts on Expedia? Jake, do you have any thoughts on Expedia?
Yeah, as an Airbnb investor, I look at Expedia, I look at Booking.com. These are conglomerates that own a lot of different companies. I have an interesting opinion here. I actually think Expedia and Booking.com are fine companies. I think that they're going to continue to have market share. I'm just making a bet on who I think the winner is going to be. I have not looked at their most recent report, but a 30% share buyback sounds pretty hot.
Yeah. So when you're talking about Airbnb and the founders of that business and everything like that, and how they're trying to innovate, build new products, and whatever AI is going to be, they want to be a part of it, wherever they slot in. I do have to admit, I think Airbnb is the company. I do not think Expedia is going to be a company that is going to innovate like Airbnb is going to. So basically what I'm trying to say is if AI is going to leave companies behind, it is going to be Expedia and Booking.com, and I do not believe it's going to be Airbnb. I think Airbnb is going to be the company that grows with everything going on in the world. Just because I agree, the founders are studs, man. They're damn studs. They're gonna kill it.
I love Brian. I think don't tell my girlfriend. I think I have feelings for Brian, man. He's so cool. I do see a comment up here that I just want to take in complete fairness. I don't want people to think we're skipping over bear comments here. Lincoln, I would love to hear your source for this. It's possible I'm mistaken, but Airbnb has not increased their debt. Their debt is something they took out during COVID when their business almost crashed and fell to the floor, which they revived like a phoenix since then. And their share count is actually decreasing. They bought back $2.25 billion worth of shares for the fiscal year of 2023. They just authorized another share buyback program of 6 billion shares. And from the words of the CEO's mouth himself, that they buy back shares to offset share dilution and then some. So this is not what I saw in the financials, but if you believe that we missed something, give us the links. But that is not what I saw.
Okay, Manulife reported earnings. Any comments? I only saw the highlights. I did not dive into this. They seemed good. Company increased the dividend by almost 10%. I believe it's trading for a price to earnings ratio of like 8. Earnings grew double digits. So great report. I think the stock deserves to be selling for above $30 range Canadian now. And yeah, that's kind of my opinion. I don't own it anymore. I sold it a few months ago because I thought that there was just better opportunities for my investment style. MFC to me is like a really good income stock, but that's not really what I'm prioritizing in my portfolios right now. So I think I swapped it for more BAM, which is not a surprise.
BAM! Dude, I can't with you and Brookfield, man.
Bro, it's fine. We'll see how it plays out.
I have so much trust in you. Like I just kind of feel and know that'll work out. But yeah, we're not going to rehash it. I'm on the sidelines for that one, like cheering like the cheerleader I am, looking at the most simple businesses I could possibly find.
Exactly.
I do not have the time to learn that crap.
It is not simple. Every time I even go through the earnings report, I like sit down with a cup of coffee and I'm like, okay, it's going to be a long one, a lot of reading, but we're going to get through it though. So yeah, it's not an easy business by any means. Let's continue on. Yeah, Daniel, have you looked into Versa Bank? It's a Canadian bank that popped up on the stock unlock filter. Yes, I have. I actually know someone who used to be on the board of directors of this bank.
Do you have insider information?
No, they have not shared any insider information. They were former board of directors for the bank for a very long time, and they're actually very close to me. But outside of that, I just don't understand this bank. Like for me with banks, you have to really understand what it does, and Versa Bank, I cannot explain what they do. I think what they do is they're like a lender to consumers at the point of checkout. So for example, if someone is going to buy something and they want to lend the money to buy that thing immediately, I think Versa Bank provides those loans. But I also could be wrong. But if I'm right, that's not the type of thing that I'm bullish on. I don't like that. I think it's pretty high risk. So I've just avoided it. I think EQB is a much more attractive bank. So EQB is my horse. That's the one I chose.
Today I learned that there's a place called London in Canada, and that really confuses me because that's where the company's headquartered.
Yeah, London, Ontario.
So this surprises me. I'm looking at the stock unlock right now. Let me actually share my screen because, Daniel, I have a couple questions for you about this business that actually look cool. Full disclosure, I've never ever looked at this business, which is kind of sweet because having a fresh set of eyes, I do not have a tainted mind here, or at least on this one. They only have 119 full-time employees, so their market cap per... Sorry?
They're small, yeah.
So so their market cap per employee is impressive, even though they are definitely a smaller cap business at 389 Canadian. But Daniel, this caught my eye. Insiders are buying the crap out of this stock.
Yeah,
like, that's a lot of insider buys. I hardly ever see that. Like, this is a lot.
Yeah, from what I've heard from the person I know, they said the CEO of this business is like, they would call them a genius, and they're incredibly bullish on their own business, as you can see.
Taylor David Roy.
Yeah, and okay. The person I know basically invests in this business because they have complete faith in the CEO. But that's not enough for me.
Well, the CEO definitely has faith in themselves with these buys. I mean, this does show a lot of confidence. I know that you actually have feelings, very positive feelings towards Bruce Flatt, if I'm remembering the name correctly, because he is buying his shares and putting his money where his mouth is, aligning incentives properly for that share structure. So I agree with what you said. You can't only trust the CEO, but I think it is fair to say that if you're making positive and negative remarks about this business, definitely a positive remark.
Oh no, it's a positive for sure.
Someone's asking, what bank is this? What's it called? It's called Versa Bank. I'll type it in the chat.
It's Versa Bank. It's up a lot recently too. It's actually up 50% since November. So they've been doing good. And even on a PE basis, I mean, they're still trading for a 9 PE, forward PE of 7.47. If we take a quick look at the financials here, the revenue is growing, all-time high revenue in the most recent quarter. Business is clearly growing. So I don't know. On paper, everything looks pretty dang good. I think there's also pretty high insider ownership. This business owns 30%. CEO owns 5%. Some high insider ownership, so that's a good thing. So, I mean, like, it does have the makings of everything that I like, except for the fact that I don't really understand what it does and where its growth is coming from and if it has a moat. So because of that, I can't buy it.
Dude, it's because you're not a genius, man. You got to be like Taylor.
I'm not a genius. Just not. EQB is so much easier for me to understand.
Dude, I have almost never seen that much insider buying. I'm not saying that that's like the top ever, but you don't see that every day. So
no.
Interesting. Yeah. If anyone is buying that stock or knows more about it in the chat, like, please enlighten us, talk to other investors here. If you're listening to the recording, we do this live. So come hang out with us live on YouTube sometime.
All right.
What should we take next here? I also got Chewy up my sleeve, but having a lot of fun with you taking live questions here. Where should we take this, Daniel?
We just got asked about this company, Boston Omaha, which I've been getting asked about a lot recently as well.
I've never heard of this, but Omaha is Buffett City, right?
Yeah, I've heard that this business may have ties to Buffett. I'm going to butcher this, but I heard it's one of Buffett's like grandson's kids or something. Someone has some relationship to Buffett in this business.
He bought him a coffee once.
Yeah, exactly.
Sorry, someone's saying Boston Omaha is not related, so apparently it's just a common name.
Okay.
City name. But
anyways, this business has been around since 2017. It looks like, and since then it's had wild swings. But in general, it's up 12%. So, 12% over 8 years now is not a very attractive return to me. But I've been hearing people say that, I don't know, they like this business. Now, here's the things that I don't like about this business. Its revenue is growing. Incredible. Revenue growth is great. However, if we take a look at the expenses of the business, this business is operating at a loss. Its expenses are higher than the revenue. Let's take a quick look at the balance sheet. Cash is 103 million. Current liabilities are 40 million. So they have enough cash. Liabilities are 223. Tangible book value is growing. That's good to see, actually. If we take a look at cash flows, operating cash flow is kind of all over the place. It's positive, then negative. Now it's positive 16 million again. Their investments in property, plant, and equipment are also very high. So CapEx is very, very high. which means free cash flow is negative. So I don't like that. I would want to know why that is. Why is free cash flow negative? Like where is this CapEx going? What is happening there? And even on an operating cash flow basis, it's $16 million in operating cash flow on a $500 million market cap. So 500 divided by 16 equals 30 times operating cash flow. That's not cheap, in my opinion. So I don't know.
I agree. I'm reading the About section on our general tab, and I am so perplexed as to how to describe this business in one sentence. It seems like they engage in the provision of billboards across the country, which is interesting. It seems like they also have a segment which conducts broadband operations. I think broadband's going away. I also thought that billboards were antiquated, but then it also says in here that they engage in insurance brokerage activities. So like my question is like who's running this company, who's working on it, where's most of their revenue coming from, and like do they have a mission or are they just like scattered? Like how is provisioning billboards related to giving people broadband related to insurance operations?
Well,
I'm sure it makes sense if you read on it, but that's just bizarre.
Well, I think it's supposed to be like a mini conglomerate. So they have a bunch of different businesses, right?
Fair. Okay, fair. So they operate them like as independent units. Okay.
Yeah, like it's like a Berkshire. It's like a small Berkshire Hathaway where they have an insurance business, they have billboard advertising, etc. But when I take a look at the financials, the only really good thing that I see here is the revenue is growing. But then at the same time, like it's not profitable growth. The profits are not growing. And a business has got to be growing profits for it to be able to create shareholder value. It's the profit growth that matters. So if revenue growth, if the revenue is growing, but profits are not growing with the revenue, then that revenue growth is meaningless. And that's exactly why you can see the stock has not followed the revenue growth.
Yeah.
So I would want to know.
Oh, sorry.
I would just want to know what are they going to do to get profitable and grow profits, because that's all that matters to me as a shareholder. So that's why I'm not really interested in it.
Yeah.
And yeah.
I was going to say you're not sharing your screen anymore, but I was going to segue into while we're feeling bearish and having bearish conversations, Fubo is down big today. That is a streaming platform. I think it's the number 3 holding in ARK, Kathy Wood's fund, and they just did not have a great report. The live chat could let us know if you want to see us go through Fubo a bit, or there's a couple other suggestions.
Dude, Kathy Wood is the god of investing, okay? You can't question Kathy Wood.
I'm keeping my mouth shut. My mom once told me if you don't have anything nice to say, don't say it at all. So what I do here, I'm going to say something positive about Kathy Wood.
Okay.
I love investing and I love stocks. And while I may not agree with her style of investing and her way of evaluating businesses, I'll make a common thread to Robinhood, because we also were not in love with a couple of years ago Robinhood's business model. But here's the one thing they have in common. They're getting more people into investing. And I don't think that's a bad thing. So to be fair, when you and I got into investing, we sucked and we made a lot of mistakes, and maybe worse mistakes than Kathy Wood has made, to be like very fair. But if we didn't have that intro to our like newfound love in investing, we may have never have been here to get good for it. So did you see what I'm trying? I'm trying to say something nice.
Okay. I agree. But I think that Kathy is luring people into investing by giving them extremely false hope, to the point where it's like you may invest with Kathy Wood and be like, this is it. This is it. This is investing. And then you lose 80% of your money on one of her picks.
Dude, Zoom, $1,000 price target. They have such a big moat with their video processing.
Yeah, bro. Let's go. Zoom to $2,000 a share by 2026 on our bearish case estimate. Easy. Like that's the kind of stuff she throws out. I'm over exaggerating right now, but like it's ridiculous.
Currently trading at $63 a share.
Anyways, I got some feelings towards Kathy Wood, apparently. That
I can tell. Maybe we should get some therapy about this or something.
Let's move on. All right. Someone asked about because I agree. If you don't have anything nice to say, just let's move on.
Oh, dude, you're past that point. We blew through that door.
I know. That's why I'm gonna stop it. Any thoughts on Adobe? Yeah, so I was actually talking to some people in my Discord earlier this morning about Adobe and the whole OpenAI video that's going on right now because their videos are nuts, man. They look real.
So are you talking about Adobe or the Sona Open?
Sorry, I'm talking about OpenAI, their Sona that they just came out with. The videos look real. Like even the physics in the video, there's like a dog shaking and it's like in the snow and then the snow falls off and the physics are all perfect. It looks real. So it's crazy. Now, how does this impact Adobe? Well, I'm going to project this out 5 years because AI is moving ridiculously quickly right now. In 5 years, if I could type in a script to a Daniel Pronk video and say, hey, create this video, here's my background, put my face in it, let's go. Then I may never have to use Adobe. And Adobe's not cheap, man. I pay like $1,000 a year for my Adobe
Google
product.
will build that into YouTube, like 100%.
Yes.
You might have to pay for it, but
so what I'm trying to say is like, if there becomes a point in the future where I can simply type in a simple prompt and a video is created, and then I don't have to use Adobe or spend $1,000 a year on Adobe, I'm going to do it. And I actually think that's coming. So after this OpenAI, I already forgot the name, Sona?
Sona, S-O-N-A.
Sona. Okay, that's a League of Legends character. I can remember that.
I'll double check that actually.
Sona, let's call it.
Oh my gosh! Wait, sorry. Is it Sona or Sora? I think it might be Sora.
Okay,
someone
Sora.
please correct us in the chat. So we've already made.
Anyways, doesn't matter. Sora. Yeah, Adobe is. I believe its stock is down off of this new announcement of this AI video creating, and I think it's kind of justified because like Adobe, its business may be attacked. I think that they're going to have to come out with something on their own to try and compete with this. I will say that Adobe's AI Photoshop stuff is awesome. Like, as everyone, well, not everyone knows, but I was a photographer at one point, and I do still take photos just like as a hobby once in a while. And being able to just circle things in Adobe and then say remove, and then Adobe like removes it and fills it in perfectly, that's awesome. But I think that they're going to have to do something like that with video to compare or to compete with this Sora that just came out.
Yeah, I am so happy you're saying this because I've been saying this for the past year. If investors are not looking at the businesses they are investing in and asking, can the moat of this business be attacked by AI? I think that is a huge mistake. Here's one example, Payc, P-A-Y-C.
Yeah.
They are a B2B payment processing software. They actually came out with a new product that was way lower margin, but had AI built in. There are so many Web 2.0 companies that have built software, which are going to literally be eroded away and driven into the freaking dirt by AI. Do you want to know who that's not going to happen to? Chewy. How is AI going to help you build more warehouses and ship more dog food? Do you want to know who that's not going to happen to? Airbnb, because they already have the network, and AI isn't going to make new houses and create a new network effect, right? Maybe I'll be wrong. Quote me. I could be wrong. I'm not 100% confident, right?
No, you're right. And I was, where I was going with this was, sorry, I'm reading the chat. People are calling me out for being a gamer, which is awesome. Yes,
dude, I missed that completely.
I play League of Legends on my free time when I have it. Okay. It's
Loser.
fun. No, it's fun. we won't get into a League of Legends chat, but I can nerd out on that for a long time. I'm trying to think of businesses that are not going to be disrupted by AI because arguably Google could be disrupted by AI. Like I'm seeing so many people throwing or trying to attack Google's mode, I should say. And who knows, man, maybe some company is going to come out with some AI that just like destroys Google. We'll see. But the businesses that I don't think are going to be disrupted by AI are, I think, Amazon. Amazon's fulfillment network is ridiculous. I think that Amazon's mode is crazy. Railroads. I don't think railroads are going to be disrupted by AI. I don't think Brookfield is going to be disrupted by AI because they own Brookfield's core business. I know Brookfield is a confusing company, but at Brookfield's core, what it is it owns assets that are the backbone of the economy, like data centers, railroads, terminals, shipping ports, oil and gas, et cetera, et cetera. I don't think this stuff is going to be disrupted.
Sorry, were you going to continue there?
Just like the final thought was just like, I'm trying to think of businesses that are not going to be disrupted by AI.
I'm going to word this very simply because I feel a little bit triggered. I understand you didn't represent it as your own view, but let's actually talk about Google and AI. because it's very related to the conversation we're having. On one standpoint, you need to see what businesses' moats can be eroded by AI. But the other side of that question is what businesses are best suited to take advantage of AI, which then asking the deeper question, well, what gives someone an advantage in AI? The prevailing answer that I agree with is the data moat. If you look at the amount of data that Google has in YouTube, in Google Docs, in Gmail, the fact that they already have you at the press of a button in over half of the phones in the world, I would argue that Google is actually best positioned to win here. And they actually did release a Gemini model the other day that people are saying is better than Chat GPT-4. It seems that parity will be reached soon. So, all right, you are raising your hand. Go
I have
ahead.
a question. Oh, I forgot my question.
You jerk! I was going off. Wow. You penalty flag on the debate, sir. Penalty flag on the debate. But yeah,
No,
anyways, point being, investors ask yourself these questions. Right?
I remember my question. Google CEO. I have to admit, I own Google shares, but this guy is not giving me confidence at all.
I don't like it. Maybe we can agree on this. When I listened to the Google's earnings call, Sundar sounded like a bitch. Like, pardon my French. He didn't sound confident. He said a lot. Compare and contrast that to when you listen to Microsoft's earnings call.
Dude, Microsoft CEO.
They were on fire.
He's got that dog in him, as they say. Like, that guy is ready to fight. And I don't think Google CEO has that same bark in him. I think it's just not impressive, is what I'll say. I think Microsoft CEO is very impressive. And I think as a shareholder, I would not be opposed to looking for a new CEO that is just like got that fire in him. Or her. Him or her. Or whatever. Any gender. I don't care. Find someone with bark in them.
We are a politically correct stock analysis show for sure.
I'm trying.
Yeah, man, I have to agree. I mean, not to like make this sound super tribal, but some of it's true. When you're operating a company and you're a founder, like you got to be a boss. You got to be leading the troops. And like Sundar was not instilling confidence in me. I actually have friends in the city that work at Google. One of them just got laid off. And every time I ask them about what the work culture is at Google and all that, I get like really wishy-washy answers that like depending on what team you're on. So look, I own Google stock. I was buying it heavy at the end of 2022. I think it's fairly valued today. I think it's really hard for them to lose with the amount of data that they have, and you can't count them out. I mean, they own YouTube. I think YouTube alone, it could be $1 trillion business in the 2030s. I have been saying that for a year now. So I would like for them to potentially look for a new CEO too. Sundar's an extremely intelligent guy. He's been at Google for a long time, but you need like a wartime CEO during times of platform shifts like this. Yeah, I didn't feel good after that earnings call, man.
I agree. They need
Sundar, I think, Google search. I just think, like people are just going to go to Google. I'm just like, stop making me upset. Stop saying
they need a Winston Churchill. They need a wartime leader. I agree with you. They need someone to come in there and just be like, listen, this is it. We're changing the game.
We are off the rails. You want to bring us back to reality, taking a new comment here, or should we double down on this one?
I don't know. I think it's interesting. I think it's very relevant to what's going on today.
Yeah. Let's see. We got tech fight is always between Apple and Microsoft since the beginning of tech. I'd actually disagree. Microsoft was not looking really good in the mobile revolution. I think that they had a huge turnaround. I am bearish on Apple. I don't think the business is going away. I think they're going to stay around, but I'm not an Apple user. I actually think the Quest seems like a better product. If we watched Mark's video yesterday, I think he made a compelling argument. So,
dude, Apple, I was reading a huge thread, and these are people who were like diehard Apple users. I wish I had the thread saved. I didn't know we were going to be talking about this, but these people are returning their headsets from Apple because apparently like they're getting headaches. The product is too heavy. They don't actually like it. Like it's putting strain on their eyes. So I don't know. I think that there was one video. I try to balance myself out here. So there was one video that I thought was really awesome. And it was a mechanic who was wearing the Quest headset, or I actually don't even know the name. The Vision Pro. Is that Apple?
Yep.
Vision Pro is Apple. Okay, so he was wearing a Vision Pro headset, had both of his hands fixing the car. He's a mechanic. And then when he would look up in virtual reality, I think it was a YouTube video playing that was like guiding him how to fix the car. And like all he had to do was just like look up and over to the side. I thought that was sweet. Like that right there is going to increase his productivity as a mechanic greatly by having Vision Pro.
The best use case I've seen to date, which is a silly one, and you just have to watch the video for it to make sense. Someone was vacuuming their floor, and what the software did is it colored the entire floor with like some color, and as your vacuum went over it, it would remove the color. So you were like visually able to see like what parts of the floor you were vacuuming or not. It does sound silly, but like that was a very real, like fun use case for me.
Now, would I pay $3,500 for that? No.
Would you pay $500 for the Quest? Because I was one person to like have never ever bought these. I like am slowly actually leaning towards like maybe I want to try this within the next year or two.
I would, off tangent here. I went to this place called the Rec Room in Calgary, and they had virtual reality, and it was like a headset. It was not Quest, but it was like a headset, and I was playing a shooter game. That was fun. Like, I will say, I would go pay to do that again. So I don't know. I think there's problems right now, but I think that these problems are going to be solved. And over the long term, I think that these virtual reality headsets, like if you could just get it in your glasses, and it was like high tech, and the battery lasted all day. You plug it in at night like a phone. That would be sweet. But yeah. I just don't think it's there yet. I think that there's still a lot of issues they got to work out.
But we can all agree that's where it's going. Like, I think when everybody agrees on it, it's just like, it's a matter of time, right? Like, we already saw this with phones. So it's really exciting. I agree.
Oh, it's going to happen. Yeah. I'm bullish on it. I just don't think it's there yet. And then I also don't know, what are the margins on these products going to be? Like, how profitable are they going to be? Is it going to be YouTube who actually wins because people are going to be watching more YouTube on these devices? I don't know.
Well, time will tell.
Yeah.
We have a lot of great comments here. A couple people trashing CEOs, which I think is a little funny. Where is this one? Yeah. Google is the nice guy at the bar who never gets the girl.
Google is currently friend zoned by the market. That's what we'll say.
Yeah. Zuckerberg is a biased source. Super fair. Super fair that the CEO is going to be talking of his own product. I mean, yeah, you go look up other reviews as well. Who's a better CEO, Tim Cook versus Satya Nadella? They're hard to compare. I think Satya has definitely been a better CEO in the last few years with the platform change, but you know, Tim Cook is an amazing operator. My main criticism, what people usually agree on with Tim Cook, is he is just following Steve Jobs' playbook, and there really has not been that much innovation out of Apple since Steve Jobs unfortunately passed. So I would have to pick Satya here.
I'd agree.
Yeah.
My whole thing with Apple is, like, Apple's business seems to have growth spurts and then flat lines and then growth spurts and flat lines. The company's in a flat line right now. And I don't know what's going to cause that next growth spurt. Maybe it's the Vision Pro. I'm not convinced it's there yet. But we'll see. And then my other issue with Apple right now is it's trading for a multiple like it's a growth company when the company is currently not growing. So they got to fix that. Like, that's my opinion on Apple today.
Yeah. Should we segue into a very quick Chewy chat? What are you thinking?
I mean, personally, I don't care about this business at all, but.
Cool. Well, I'll make this quick. We have talked about this on the channel before.
Okay.
There's pros and cons here. I started talking about the stock at $35 when it had already fallen 80%. This is a recession-proof business that sells dog food. Around 75% of their revenue is from subscription. And there's good and bad going on. I still haven't bought. I still think the stock's slightly overpriced. And I'll just run through this really quick, Daniel, to not overbore you here. So Chewy did put out their 10K. What I really did not like is if you look at their active customers, it's actually down year over year. That is not great to see. The reason why their revenue is going up is because they're getting more net sales per customer. You see the 543 compared to the 477. And they're also increasing the number of customers that they have on their auto ship. So I'll get out of their financials since you can go look at them. The last thing I'd actually call out is just look at where they're getting most of their revenue from. Most of it is consumables, which is food. So I have a lot of people asking me, like, what's your opinion on the stock? Where's the business going? I think it's a recession-proof business. When times get hard, people are not going to stop feeding their pets. Like, I'm sorry. So I think that's great. I think it's an AI-proof business. I think they have a strong moat around a very hard vertical because shipping dog food, which is 50-pound bags, is expensive. They have been building out a automated shipping logistics network and warehouses around the US that have been proving to increase their margins over time. What I am a little bit bearish on in this business is I need to see them continuing to increase their customers. What I'm excited about is that they're only in the US today, and Chewy is going into international expansion. I was very underwhelmed. I don't mean this in a negative way. When they said that they were expanding into Canada, that's purely a numbers game. Canada is not even the size of California. So I just didn't really see a ton of growth coming out of that. However, the reason why they're doing that is to try their international expansion strategy before they do it in a larger demographic like Europe. This company has no debt. It's actually run by an ex-Amazon executive or director level person who is really following the customer service framework where you obsess over the customer experience. And I see you raising your hand. So anyways, I'll end this with saying I still think the stock's overvalued. I do like the business. However, they are seeing some issues with customers. And if they can prove to me that they can continue to grow and continue to maintain profitability at the right price, I would start a position. That just hasn't happened for me yet.
We're talking about Chewy currently. I agree with you on all those points. I love my cats. Tuna is amazing. Like, I would cry if anything happened to Tuna. And I will not stop feeding him. Like, I would cut out so many other things in my life before I ever considered stopping feeding my cat. So I agree with you that it's recession proof. I'm sorry if I worded that in a bad way.
It just made it sound like you actually thought about it. You're like, I considered it, but then I said no.
Question time. Hand raise question time. So what price do you want to buy this business then? Because personally, I would value this company off of its operating cash flows. So what price? Like, it's 15 times operating cash flow. It's a record low. The business has never been this cheap. So what price is fair?
I hold the right to change my opinion over time. The number I have settled on that I have said in the past, so people can fact check me here, I think that they're between a $7-8 billion market cap today. If they drop down to a $5 billion market cap, which I think could happen this year because they're seeing big headwinds on growth as they, try to set up for the next propulsion as they internationally expand, I would start a small position and probably start dollar cost averaging in. But I don't love the business enough like Airbnb. Like, I would never let this become a huge percent. One quick thing that I did not bring up, which I think is exciting, although it's incredibly speculative, they are getting into the pet insurance market. The existing competitor there is called Trupanion. You can look at their stock. They suck. Lemonade is also partnering with Chewy to give pet insurance to people. And it makes a lot of sense to actually bundle this together. The speculation there is like, can they do this profitably? Because it just really hasn't been a high growth investable business to date. However, my sister, a lot of my friends, they own pets and they have all been burned really bad by pet bills. I think that what the veterinarian clinics are charging is going up over time, very similar to human healthcare. Pet healthcare is also going up, as silly as that sounds. So I don't think it's wild to have a bullish speculation that if they can expand well internationally, and if they can also bundle in this pet insurance and do that profitably, I really believe that they could be the global pet company, just like I think Airbnb can be the global travel company. They're taking market share from competitors still in existing markets. But yeah, it's 28% gross margin business, right? It's not a tech company. So I think that people really need to tamper their expectations. Like, if anything, you'd want it to compound generally better, slightly better than the index is, buying it at the right price. But I would never expect this to grow like a Google, Microsoft, or like Texas Roadhouse.
Yeah, no, I agree with that. I have one investment like that in my portfolio, which is CP Rail. Like, I don't think CP is going to grow at 15% annually. I think that from its current price, it may do 10%, maybe. But, I want some exposure to it because I think it's a high quality business with like the most durable moat I can ever think of. But that doesn't mean like I want to make it 20% of my portfolio. So it sounds like that could be Chewy for you. Now, moving on. Equitable Bank earnings next week. I think there's a chance that I might be on a plane when those are released. So that might be sad. But I will cover them on my channel for sure. Can someone confirm they see this comment? Yep. I see your comment. I actually think that's pretty much it. I think I'm ready to wind this down, Jake. We've been going for over an hour.
You read my mind. I just looked at the clock. Truth be told, if time were an infinite resource, I'm in flow state. We could probably go on for hours. If you are just joining, we in 2024 are committing to doing this at least once a month, which is going to be the third Friday of every month. We'll have to see if we are actually both in town next month. We might need to push it back a little bit. If you are not yet in the Stock Unlock Discord, we are the two co-founders of this business. We do all of our announcements in there. It's free to join. Got a free newsletter too. And of course, we have a freemium software product. So if you have not checked that out yet, I highly recommend doing so. Yeah, see, when I do this, hearts sometimes come out, and I'm trying to figure out if that's like a Mac thing. See, dude, it happened on Google Meets. I thought it was a Google Meets feature, but now I'm just like, I don't know. I went like this the other day, and a freaking rainbow came, but I like can't do it all the time. I probably sound like an old geezer, but
we miss you too, Sam.
Yeah. Anyways, if anyone's got any comments in the chat asking us about Stock Unlock, I'm always happy to hang out and talk about the business selfishly because it's all that we do. Daniel, I'd say, yeah, probably about time to call it here. I might see if any question comes in. And if you're listening to the recording, come to YouTube sometime.
This one from Sigig says, please post and schedule in advance so I can notify me so I don't miss it. So yeah, right now the plan is every third Friday of the month we'll do this. But if that changes, we'll let you know. I am going to Spain for 3 weeks, so I might be in Spain for the next one. We'll have to check. But yeah, we'll let you know.
I am posting a link in the chat to our free Discord server. It's not required to talk in there. We do announce the events in that server. That is the best place to interact with us. It's free to join, free to make an account, totally optional. We're not telling you to do it, but hey, if you're looking to get notified, that's definitely the best place to hang out for that.
Yep, agreed. Okay.
Dude, look at this one. I really like the new function for the bar chart. Yeah, Daniel, I'd say I know you're a little bit busier than me today, so no harm, no foul if you head off. I'm just going to see if any more comments come in here on Stock Unlock. And if you've been hanging out with us the whole time, thank you so much for spending part of your Friday with us. This has been really fun. Daniel, you should plug your book and then head out.
I actually have one question I can answer here first. Can industry averages be incorporated? This will be incorporated in the AI reports that we're going to be releasing within hopefully the next couple of months. We will have the industry comparisons and the company's growth, et cetera, et cetera. Yes, I can plug my book. Jake, can I share my screen?
Give me 3 seconds, and yes, I'm just going to stop sharing on the Discord right now. However, this is showing the updates we send out, and this is one of the highest reactions that we've gotten in a while, so people are liking it. That's it.
Okay. Sharing my entire screen. So yes, if you have been waiting for my book, it is officially out. You've probably seen that in the Discord or on my personal YouTube channel. But this is my book, The Fundamentals of Investing. It was released on February 5th. It's doing well. It's the #1 bestseller in stock market investing. It's pretty friggin' wild. So yeah, there it is, #1. And if you've read my book, then you should go and rate it, because getting more ratings helps get the book to more readers. So I'd appreciate that as well. And yeah, if you want to check out my book, there it is. It's great. People have been reviewing it. It's got a lot of great reviews already. And I don't really know what else to say. So.
Oh, dude, I'm going to scare you away, because this is when there's no parents, no rules coming out, because someone just said Stock Unlock stickers. Can you make them? You've heard it from me, unless if Daniel just starts yelling at me to shut up, that I am very happy to share the Stock Unlock logo file with you if you are a fan and want to make stickers. If you profit off of these stickers at all, hey, you can do that for the time being. We don't want to make the stickers. And I think that's good for brand if people are like putting Stock Unlock stickers everywhere. Maybe I shouldn't have said that. So correct me if we don't want to let people do that.
No, I don't care. Someone can make stickers. That's fine. The Discord is free for those asking. The Discord is free. Okay. If you're going to stick around, Jake, then I'm going to hop off.
I think I'm gonna hop off with you. Okay. We really appreciate everyone hanging out. I thought you were doing tattoos. I am going to get the Stock Unlock logo tattooed on me probably after we raise a Series A. That is not a joke. I'm being like 100% serious, by the way. And when we hit a certain subscriber target, I will finally cut my hair as well. I usually have short hair, and I vowed not to cut it until we hit a very special number. We're about 71% of the way there, so we're getting close. We do not give financial advice here, but we did talk about SMCI at the beginning of this. And yes, highly recommend Daniel's book. It's getting some great reviews for the people that already read it. Should I click this end stream button? This has been a fun one.
Yeah, it's been fun. I'm ready to go.
Yeah.
We should
See you
cut
all
your hair live. That'd be fun.
Oh my God. See you all next week next month for Stock Talk episode, Stock Unlock Live episode number 52. We're out.
Bye, everyone.